right, welcome back everybody to Getting Past the Premium podcast. We're excited today to have Andy Bassett, president of Ellerbrock-Norris, on the podcast, and we're going to talk about the insurance industry, particularly property and casualty, and the journey that Ellerbrock-Norris has taken to get from that traditional insurance product sales to being an advisor to clients. So we're looking forward to this episode, and we'll jump in.
Welcome to the Getting Past the Premium podcast.
Welcome, man.
What's up?
Good to have you on the podcast.
Yeah, no, excited to be here. This is fun. Am I the first guest to actually supply the drink?
Yeah, I was wondering how many podcast hosts have the guest make the drink for them. That's probably not that heard of.
We're going to start it.
I think it's a good deal.
Well, you're big time already.
Works for
Thanks
us.
for, this thing's huge. Third episode.
Yeah.
Absolutely.
Hey, Big Al, did we get a download from Europe?
We did actually, yes, in Clichy, France.
So we are worldwide.
Welcome back, whoever we have from Clichy, France.
Officially worldwide.
Well, we hope.
I did take French for 4 years, but in the past now.
I love it. Gone international, by the way, Manhattans.
Yes, tell us what we're drinking.
That's what we're having Manhattans. It's kind of like my go-to drink, and we have the stuff back there. Just did a little rye whiskey.
Jim Beam wants to sponsor.
Yeah, right. Did a little rye. I don't know. I grabbed Jim Beam because it was on sale, but
it's pretty
it
good.
Tastes good,
Tasty.
and so there we go. Manhattan's on the GPP podcast today.
That's right. I like it.
And what kind of cherries? Those look fancy.
They are the filthy cherries. So I don't know. I kind of like them. They're at a price point that makes sense. They're not the $35 a bottle of cherries, but they're really good.
Well, they're good.
Yeah. So there you go. That's what we're having. So cheers, guys. I enjoyed being here.
Absolutely.
So today's conversation, we just wanted to kind of talk about Ellerbrock-Norris's transition, as we talked from that product sales mentality, that a lot of the property and casualty insurance industry operates into, the evolution of becoming more of that advisor to clients, right? And how Ellerbrock-Norris has done that over the last 6-7 years, what the experience has been, and your thoughts on how others can do that. So maybe talk where Ellerbrock-Norris was to start, 6-7 years ago before trying to make this transition.
Yeah, it's the history I think is important, and it's a long history. 1906.
Yeah.
So Ellerbrock-Norris has been around a long time, and we have always been, still are, very good at servicing insurance.
Yep.
Right? And we were, grinding through the typical insurance agency model of, we're going to have the best service, best-in-class service out there. But, we're still fighting against pricing from the product standpoint, certainly things we can't control.
Would you say copy, quote, pray model?
Yeah, there you go. That was a term we use a lot. And I think people can understand that, right? What'd you do? You met with somebody, you got a copy of their current program, and you put a quote together and you prayed like heck they'd figure out a reason, whether it was your service or the pricing or something that they would choose to do business with you.
As long as you got it on the top of the stack.
Yeah, right.
No, that's a whole nother conversation.
That is, we can go real deep on that. But we were very good. I mean, we won a lot of business that way. We were growing, double-digit growth every year. Still have a really good service model. But for whatever reason, for me, it always felt like something was missing.
Yeah.
And honestly, you go back 5 or 7 years, I didn't know exactly what that thing was that was missing. But we started to do a little bit of research, started to meet with some of the right people, even engage with some consulting relationship, and figured out pretty quickly that the missing piece was the desire to be that advisor. There was the gap there was, how do we go from being really good at insurance and still grinding out and winning things that way to shifting to more of a top lead trusted advisor of our clients from a risk management foundation too, because that's where our background had come from. So that was, you asked about where we were 5 or 7 years ago. That was where we were. And then we started through that line of thinking or that transition. That's what fast forwards, to today. And our Encore brand and everything we've built since then has been around that foundation of how do we become that holistic advisor to our clients. And I think we've done a great job of doing that, and we've managed to almost 10x revenue since then. So we've had tremendous growth along the way, but it's also been the right growth and the right kind of clients. And so that's kind of where we were to where we've become and where we've come in a real nutshell.
Yeah. Well, typically that was quick for you. I mean, that was good. But so maybe put some context for everybody around when you say become that advisor to a client. That gets used in our industry a lot, right? Just like risk management gets used in our industry a lot. But what do you mean when you say become an advisor to our clients?
Well, it's a great question. You're right. Everybody uses it. It's kind of a catchy term. I think one of the things that, to me, the ultimate benchmark is when you ask a business owner, an executive team, even individuals, like who are the key people that they trust every day to help them achieve their goals or accomplish whatever it is they want to accomplish. And who do we know they say? They say their attorney, their accountant.
Their CPA. Traditionally, when we go back and we look at all the studies, the CPA is at the top of the list every time for most trusted advisor.
Nobody wants to pay taxes.
Yeah, they are. And attorneys are there.
Yep.
And I mean, you think of even things like their medical doctors, their medical providers, people they trust for high-level advice, right? That's that tier of professionals, advisors that they lean on for things. So to answer your question, the advisor role is how does an insurance agent position themselves to be right there or actually that first absolute lead advisor. Mm-hmm. And that's what we've seen the evolution at Ellerbrock-Norris with the development of Encore to where we've gotten to that point with many of our clients. We still have a long ways to go with a lot of clients, but we talk about it all the time, it's changing the way an industry thinks and the consumer and how they think. I mean, the model I was talking about before, that's the way many consumers have been trained to look at our industry, to look at insurance agents and brokers. So it's like moving the Titanic, right?
Oh, absolutely.
To change that.
Yeah.
But that, to answer the question, to me, if you can position yourself as that absolute lead advisor, they've got a major business decision or a major decision in their personal life, and instead of the CPA, instead of the attorney, whomever, you're the call. It's a pretty big deal.
Yeah.
Oh, absolutely.
Yeah. So, Andy, that's fantastic. I mean, one of the questions that is burning for me: why would you want to make this change? Well, I guess, like, why did you, and then why would somebody else want to, or why wouldn't somebody want to get out of this transactional based model and move to the advisory based model?
Oh, well, first off, it's more fun.
Yeah.
But I mean, like risk. Yeah, right. No, it is. What I just said, that's fun. That's a fun position to be in.
Yeah, the conversations you're having are way more
They're
fun.
way different.
It's different.
So,
yeah.
But risk. Like, there's a lot of risk, and we're in the insurance and risk management business, right? There's a lot of risk in just remaining an insurance agent or broker, I think, in the market in the future, which is, we all know as insurance agents or brokers how we're paid. We're paid commissions by insurance companies. If that's all we're doing, and if that's the extent of our relationship with our clients, there's a lot of risk that we can't control when the market shifts direct to consumer, whether it's, everybody talks about it, but I think there's reality around the Googles and Amazons of the world being able to bring the product we deliver if we're an insurance agent or broker to the public, to the consumer at a heck of a lot less margin than we can. So that puts pressure on revenue. Mm-hmm. As people become more sophisticated buyers and as they can do all the research that are at our fingertips every day, even at the highest level, there's not as much of a need for somebody that can just help them buy a product as there is somebody that can navigate through that decision, that process for them, and then connect that even in the bigger scope to their goals, to what they want to achieve as a business. So to me, it's about, you really have to look in the mirror and say, how do we de-risk? And then growth. Mm-hmm. Really, that model provides tremendous opportunity for the right kind of growth.
Mm-hmm.
Well, the InsurTech example, you just gave is an interesting one because the insurance industry has seen a lot of InsurTech over the last, call it 10, 20 years or whatever. And when those companies were first started, this is the death of the independent agent, right? And I think that has proven false to this point, right? People still want to talk to somebody before they make that decision. They might do a lot of research on those platforms. But what's interesting to me as you were talking, when somebody goes and does that research on the online platform, and then independent agents now are saying, well, they still want to talk to me to, advise them through that. Well, you're providing that advisory service. That's what we're talking about. You need to lean into that and become that advisor. And however that product gets delivered doesn't matter at that point.
Yeah.
Is that kind of what you're saying in some regards?
Yeah, I think you speak of InsurTech and you talk about the agent and broker field, and everybody, like in my example, I'm suggesting that InsurTech is a danger, a threat.
Absolutely.
It's the opposite.
Yeah.
It's one or the other.
The flip
Either
side.
you're going to embrace it and become that advisor and lean into InsurTech and make it a tool that you're delivering real advice on, and actually it makes you better equipped to deliver that advice because all the noise and stuff is delivered by InsurTech and you can just truly be the advisor to the client. Or you remain the agent or broker that's delivering a product, and now InsurTech's your enemy because
You're scared to death.
Yeah, you are.
Absolutely.
So it's going to go. I think for people that end up listening to this, which one are you, right? Because it's going to go one way or the other, likely.
Mm-hmm.
And you can either embrace it and grow with it and become that advisor and all the things we're talking about, or you can maybe continue doing what you're doing, and InsurTech may be an enemy.
Mm-hmm.
Definitely.
Yeah.
So, it's very easy in the insurance industry because it is a product-based industry, right? So it's very easy to get in that trap, and that's how a lot of people learn in the insurance industry, right? So let's say I'm listening to this podcast and I hear you talking like, wow, I'd love to get there. Like, holy crap, I knew something was missing just like you were 5, 6, 7 years ago. But that's a freaking mountain to climb, What would you say the first step or two that somebody should take in the right direction to start that process?
For us, first off, you gotta embrace it, right? You gotta go all in and but you gotta start somewhere. And for us, it started as a sales model, frankly. I think you think about how
you're saying as a way to grow.
Yeah, or as a way to become the advisor and to build that. Like for us, it started as from a sales model perspective. Like how do we build the way we're going to go out in the market and portray ourselves as that advisor? Mm-hmm. Because at the end of the day, the way that we're going to be able to make that transition and be all in is we've got to have that lead, like our first impression, our people out in the market delivering our message. It has to be around that foundation. So for us, it started as let's build Encore, which is the brand that we operate within that delivers the advisory model. It started for us as a sales process. Once you nail the sales process and we know that on the front end, we have our team out delivering the right message, bringing the right clients in, and we all believe that's who we are, that's our identity, that's our vision, mission, purpose. Now we start to match everything else we do to that model. Now your service, how you hire, how you market, all those things match. But for us, it started really as from a sales. And it starts, again, I go back to the very beginning, the belief. Like you got to have, especially the leadership team, you have to believe it. You have to believe this is what we want to become.
Top down.
Yeah, 100%. Because if you don't, I think you use the analogy and so did I, it's like moving a ship. Yeah. And you're not only battling your history, but an industry's.
Yeah.
Like the consumer, you're thinking your insurance carrier partners. Think of, there's so many relationships we have that model. Think of the systems we use.
Oh, man.
Like our management systems.
Don't get me started.
Yeah, right? I know that's a topic. But
filing cabinets with electricity.
Yeah. You're moving a mountain, right, with that?
Yeah.
So,
what's your opinion about because you're right, it is like turning what feels like to be a massive ship with, even clients or prospects who we shoot out an email to talk about our particular process or want to get a meeting, and immediately it's like, oh, well, I've got a great relationship with my broker. And it's like, no, that's, give me a second. It's like we battle it constantly. But I even think that starts from the top down. That's been driven by companies over hundreds of years that want to operate that way. from your perspective and your role inside Ellerbrock-Norris, how do you see the landscape changing in the insurance industry moving forward at the company level? But then, how is that impacting what we're viewing today, which is just company after company, agency after agency getting acquired?
Oh, yeah. When you say company level, you mean the insurance company level?
Yes.
Yeah, I mean, M&A is the name, it's everywhere, obviously, in our industry right now. So I think at the agency and broker level, I think that's a sign of what we're talking about right now. Those that aren't transitioning to a bigger, broad, I don't know if that's not even the right word, but a more advisor model, and don't have the vision, the foresight in place to be able to want to do, and to want to, frankly, perpetuate their company, however that looks. They have no choice but to probably have to look at an acquisition. So that's why we're seeing a ton of that. The carrier side, it's ironic. I was having a conversation with some people that have been in the business a long time about this and how much the insurance company landscape has changed. And, carriers have gotten more corporate feeling every year.
More transactional almost.
Transactional, obviously there's a lot of positioning. I mean, some of our best insurance company relationships, sometimes you look at it and you think it's like they're positioning themselves to sell at any moment, And so that, the old model, I think that a lot of people on the agent or broker side from an insurance carrier standpoint, there was a lot of relying on the tools and resources and relationship of that insurance company to be the differentiator. Mm-hmm. Back to the 5-7 years ago example I shared. Mm-hmm. We're going to win on service. We're going to win on price. And part of that service is going to be, what can we get the insurance company to do for us?
Yeah.
And those days are going away in a hurry. Mm-hmm. So I see that on the carrier side a lot. And so that's however you look at it, however you interpret this agent broker versus advisor conversation, how do you take all that into your own hands, right? Mm-hmm. And not rely on insurance carrier partners to deliver. Not that they're not going to have great tools, but if they're the only tools, that's a risky place to be. And so I think all of that conversation is what lends then to that merger and acquisition piece, which is why we see so much consolidation. And there's frankly, there's a ton of money coming into that.
Yeah.
Because people see the opportunity.
Yeah. Yeah, for sure. This drink's phenomenal, by the way.
Delicious.
Yeah.
Glad you like
Great
it.
work.
I have a couple talents.
So I've been excited about having you on, I know. And one of the burning questions that I've just had is, and I think can create some perspective for our audience and certainly the way that we view things. Off the top of your head, what percentage of risk, let's take your most ideal client and picture them. What percentage of risks that they face as a business gets transferred, if you will, to an insurance company? And what percentage of risk should a risk advisor be managing on their own through other strategies?
Never thought about it in a percentage. It's small though.
It's a good question.
It's a great question. Yeah, I like that. The amount of risk transferred through insurance products, they're catastrophic. They can be big. The likelihood of many of them happening obviously is pretty rare. I mean,
which is why insurance companies can make money insuring.
Yeah. I mean, it's under 20% probably.
Gets transferred to a company?
Insurance.
Yeah.
I think I'm going to go with the 80-20 rule, right?
Yeah.
20% of our risk can be transferred away via purchasing an insurance policy. The other 80% is stuff that an insurance policy is not. I mean, we just came out of the best example ever, COVID, right? Mm-hmm. I mean, we could go down, that could be a whole nother sit down in this, but in the podcast, but COVID, which is for many businesses, the biggest risk they've seen since they've been in. Think restaurants, think retail, think anything, medical field. And that was not in any way, shape, or form addressed by traditional insurance programs.
Yeah.
And so, even the most catastrophic, yes, there's very good protection in insurance policies, whether it's life insurance when somebody, a key person passes away, or disability because they get hurt or injured, or, we have significant property values and they burn to the ground. Yeah, those are big. They don't. I mean,
Cyber was a huge concern for a while.
still
with
is.
COVID, of
Yeah, we
course.
can't. Yeah, we can't ignore those. But to
Yeah.
answer your question, I mean, I'll stick with the 80-20 rule, and I'll without having ever actually put, real thought around that. But it's not.
Yeah.
There's a lot more risk. Point being, there's a lot more risk that exists in business or people's personal lives that insurance programs, policies, and platforms just aren't going to address.
Yeah. And it's just interesting to me to think about it and frame it that way. Because if you're a business owner, what have you been taught?
Right?
What have you been taught? Do you think that if you asked and you polled, which we've never done, be interesting to find out, if you polled your business owner clients and you said, what percentage of risk exists inside your business that you're transferred to an insurance company, would it be the opposite of what you're saying?
I bet every agent or broker that watches this will relate to the fact that how often have you heard, I've got insurance for that? Like the consumer legitimately thinks that insurance covers everything.
Yeah.
And
Especially on the personal side.
yeah, it's unbelievable. But even, you say that but business owners, at the end of the day, it is a very uneducated consumer
Yeah.
outside of price.
Yeah.
Like that's the only education, nearly the only education that really happens in our industry is how to go buy it for less.
Yeah.
But it's not a what it protects you against type of conversation, because we hear that all the time. But I got insurance; it's covered. Well, but that's where. How do you know? Like now we shift to that advisor. If you're the insurance agent or broker, you're going to deliver that policy, and you don't even know.
Yeah.
You don't really know what the risks are that exist outside of that. Likely, you certainly don't know if your client thinks that everything their biggest fears are protected by that policy, because you don't know if their biggest fears the building's going to burn down,
Right.
or if it's that
Right.
they have no idea how they're going to transition their business to their kid.
Yeah.
Well, that insurance program isn't going to help them with this problem, right? And unless you're an advisor asking the questions, that's why I talked about the sales process when you asked about where it developed. You cannot be the advisor unless you're there asking the questions, understanding, taking those deep dives to really know what does drive
Yeah.
the real risk here. And again,
Well, and gosh, having the business model that allows you to get out from the fray, and I guess what I mean by that is like the transactional day-to-day processing stuff, to being able to have real awareness around a business owner or a household and talking about risks that you can't insure.
that's an uncomfortable conversation for a lot of people in our business to have.
Yeah, because you're not getting paid to have it. It's part of it.
It's such a big part of it.
Well, let's connect those dots, because here's what's interesting. Insurance pricing is based on risk, correct? It's an underwriter saying, what's my risk of paying out more in claims than I brought in premium, right? So if we're helping a client better manage their risk, even if it's not directly related to that building, the risk of fire in a building that a property insurance policy would respond to, if we're lowering that risk profile, does that equate, or how does that equate to managing the risk in that insurance program, thereby cheaper insurance, better setup insurance, etc.? What are your thoughts around that?
I mean, we could go. This could be a whole nother conversation in itself. It's
I feel like I
common,
had a few of those today.
right? It is funny to think about. If you think about the traditional process of underwriting risk in our business, I mean, outside of using technology and some things like that, like not a lot's changed, right? I mean, I think everybody's watching Accord apps, right? It's asked the same thing since I've been in the business, and it's important stuff. But how much does that tell an underwriter that's sitting, well, now maybe at their house, right,
Yeah.
virtually, but in a
Probably
cube?
most of them.
Yeah, right. How does that tell them? How does this business? What's their true risk profile? Like, how do I know they're better? This manufacturer's better than the next. Okay, they're building sprinkler, this and that, but most of them are. But this one has the most solid perpetuation plan in place. They know exactly how they're going to transition the ownership of their company. So they're going to be here 5 and 10 and 15 years from now. And they've got these incredible growth strategies, and they know exactly what their competition's doing, and they know what next widget they're going to make, and they know exactly how to keep their key people, because they've got that plan and strategy in place. And all we can tell over here is the story around the building sprinklered and That's it. That's a completely different story. So now you shift that to an underwriting hat, and they're like, why wouldn't I want to take more risk with this company that can tell me that story than with this one? And when I say take more risk, meaning basically price the program less.
Well, it's all relatable, right? I mean, if you look at from an underwriter's perspective, one of the things that many underwriters will look at is the Osha violations that somebody may or may not have had. And, the likelihood of Osha coming in to fine an organization is actually relatively low. But if you have had that, it shows that you are operating either an unsafe business or one that, in their mind may or may not give a crap about the regulations that OSHA has set forth, which leads to a safe environment, right? Exactly. So again, something that traditionally an insurance agent may not think to look at, but is low-hanging fruit if it's there, right? If you have had those, and we can come in and say, hey, we need to clean this up from an OSHA perspective, which there's many tools out there to do, that's a better story to go in and tell an underwriter that says, hey, here's our plan to clean this up. Here's why this is going to be a better risk. And those things exist across. The insurance companies have the data. I mean, just a crazier example, personal lines insurance, credit scoring. How does credit scoring apply to better rates on auto insurance? It's because they've connected the dots to somebody's credit score and how they drive a vehicle. Yeah. Which is way beyond me, but they've done it, right? Right. And so we need to connect the dots for these underwriters to say, why is what we're doing in managing an underlying concern for this client going to make them a better insurance risk?
Think about it after the big event happens. Like, no matter how good you are at managing risk, something bad can still happen. It's why you buy insurance, right? Then you think, as agents and brokers, we all know we've had the perfect company, and they've bought insurance for years. And then they have this big, whatever it is, picket fire, whatever it is. And now all of a sudden the insurance company wants to non-renew. And you're like, time out. Like, that's why they buy it. This hasn't been a frequency. It's been one big issue. Well, now talk about the story we're telling. If we don't have a story to tell, the insurance marketplace is going to look at it and say, well, they just had this big event. Why take the risk? Yeah. Versus, let's talk about the type of company they are. And now the underwriters have a completely different lens to look through. But that's people, it's probably the biggest reason that the insurance industry as a whole gets the bad rap, or whatever you want to say, is that right there. As you go years and years and years, then you have a claim. Now, oh my gosh, I'm going to get non-renewed.
Now they're not profitable for 3 years.
It's like, but again, what story are we telling? Like, what does the underwriter really know about that company? What do you really know about that company? If you're an insurance agent or broker, no, you might not know much. Yeah. If you're their advisor, you know a lot.
So I want to throw another wrench in this and take it back high level. Because
he's a wrench thrower.
This is great. This is great conversation. But I'm sitting here listening to it, and again, connecting the dots back to why we're sitting here, and can't help but to think about, spending more time being an advisor, spending that time talking to an insurance company, driving down premiums, i.e. making less money as the agent, or, and so I guess
like a good business strategy.
Yeah, it seems like there's a few conflicts of interest, and it feels like you might have to go borrow money to implement this strategy. So, walk me through your mindset as a president of Ellerbrock. You understand these variables. You know these cards that we're trying to play, or you're trying to play. Again, walk me through this transition and how, just what your thought process is around doubling down on the client experience, providing more value, while knowing that all of that is ultimately going to deposit less money in the bank account.
Well, it's going to deposit less insurance commission, maybe, right?
That's a good point.
But it's not going to deposit less money. Because the insurance commission is it's a funny thing if you really think about it. You do your job really well as an insurance agent or broker, you should be reducing costs, thereby reducing what you're paid. Versus if you don't do anything and your client is a terrible risk and their premiums keep going up, you just get paid more. I mean, it's that part of it's just completely backwards. But why double down? Because there is all of the other opportunity,
Yeah.
which is, we already talked about it. I mean, we apply the 80-20, which we're just going to roll with. If we apply the 80-20 rule, that 80% of the
Seems
risk.
scientific.
Yeah, right. There's a lot of science behind 80-20.
We need our Joe Rogan, Jamie, Big Al to be fact checking us back there.
Yeah, fact check on the fly. So if this other 80% of risk is sitting there, how much opportunity does that create for us? Like that, as president of Ellerbrock-Norris, that's exactly how I'm looking at it.
Yeah.
Is all right, we're going to say, all right, the insurance side of things, we're going to do our job so good that we are going to do everything we can to reduce costs there. And we may take our revenue in the insurance side potentially could go down outside of growth. I mean, we're going to grow through that because we're going to bring on new clients, but we're going to turn around and we are going to facilitate so much more revenue generation on the other side by bringing those other solutions to our clients. And you have to fundamentally change the structure of your company if you're going to do that, because if you're going to remain an insurance agent or broker and just provide property casualty insurance. Yeah. So, I mean, that's the answer is.
Well, when you say that, I mean, I think about most likely the people listening to this podcast. In general, insurance agents in the industry, are going to be people that want to make sure their clients are taken care of.
Sure.
Not relying on insurance premiums to go up just to make the rent for that month, right?
I don't know. Do you think our one listener in Europe is this apply internationally?
Well, let's find out. Send us a note and let us know. Just translate it to English, please.
Click below to comment, right?
So at the end of the day, I mean, assuming that we have the best interests of our clients at heart, it's going to compound, right? I mean, it just naturally does. You get like your opportunity to get more clients, your retention increases, right? Which is essentially the value of an insurance agency. It's not necessarily the money you can bring in; it's the money you're retaining. And so that ultimately is going to be what leads to higher value, higher profitability in an insurance agency.
And that's a tremendous, you asked me how we're doubling down, and we are building our model to completely facilitate the other opportunities. But that's a tremendous point, because even somebody that maybe that doesn't fit for whatever the reason is, but you still want to take on the advisor role, but at the end of the day, still just going to be in a commission-based insurance model. There's nothing wrong with that, but you're exactly right. That will allow you to bring on the right kind of clients, grow with the right kind of clients. Hopefully you're doing your part as well to help your clients grow, which we all know at that point that their insurance costs go up and you're rewarded for the right reasons. And so yes, retention remains high, growth remains high, and now you're actually going to increase your revenue by doing the right activity.
Absolutely. Well, I think obviously, if you're listening to this podcast, you are wanting to, learn and get better and do something different. And some little things that I think insurance agents out there, whether you're leading an insurance agency or you're just on the sales team, little things you can do. Go sit down with an underwriter for half a day. Pick their brain on how do you evaluate a risk? What do you look for? I focus on insurance or construction clients. What are you looking for in a construction client? Go and get their real world experience, or go sit with one of your construction clients for half a day. Say, hey, can I go sit on the job site? You walk me around. I want to pick up the shovel and do some work for a little while. Learn what these things are that your clients are experiencing and how the underwriters are perceiving that. And you're going to know so much more about what to look for when it comes to helping your clients manage that insurance risk.
Build your business acumen. Right, that's what we tell our sales team all the time. Our advisors is build your business acumen. You'll build your insurance knowledge, but then you're going to be able to have peer level discussions with business owners, with underwriters, with whoever it is. Build your business acumen.
Absolutely. Well, I think you have one more for him?
I was going to throw one more at him just to close out.
Hit it with one more.
Closing question. This could be scary.
Right? It better be good.
Yeah.
All right, so
don't screw it up.
You're a company, what it is today, it's been around 115 years. You started making this transition 5-7 years ago. You look out 10 years, where's the industry? If you had it your way.
I know where we want to be. Where's the industry? Man, that's a tough question.
We told him.
Yeah.
Told him not to screw it up.
So my hope would be the industry is, like, obviously we're all in on the advisor model. So my hope is that as an industry as a whole, we can somehow shift this, the at least past parallel, the way people think about how they interact with our industry, I guess is the way I'll put it.
Yeah.
And how can we somehow get past that our industry is there to deliver a product and shift to somehow they look at the insurance and risk management industry as delivering advice. Because I just don't think that exists today. And if we can do our part as Ellerbrock-Norris to make that happen, like that would be the ultimate goal. I know we're going to do that. I'm not sure the entire industry is really going to follow. And so to me, it's how do we put our mark in the industry to shift that? So that'd be my answer.
All right.
Awesome.
Phenomenal.
Well, thanks for being on today, dude.
Good chat, man.
Yeah, it was fun.
Yeah.
It was a good drink.
Hey, now that he mixed his own drink, we might have him on again.
Yeah, right.
You guys ended up having to
cocktail.
refill there at the end. I didn't get that.
You were
far.
talking the whole
I was
time.
talking the whole time.
All right.
That was fun.
Till next
See
time.
everybody next week.
Later.
See y'all.